Yo people, how are we doing? Welcome to the video. So today I thought I'd do something a little bit different, and I thought people might find it somewhat interesting, at least I hope you're going to, if I share my first month on Trading212. So that's what I'm going to do. I'm going to show you my entire portfolio revealed. I might put that on the thumbnail. I'm going to show you the positions I hold, how much, biggest winners, biggest losers, all that kind of thing. However, you don't just waltz into a video like this without extensive disclaimers, right? Don't make any decisions based on what I'm doing, right? Although I consider myself like fairly well versed in the world of personal finance on the whole, actual active stock market investing is a whole different world, right? And I am a complete novice with it. As I say, this is the first time I've even had a go at it, and the majority of my savings and investments are in much lower risk index funds, right? Do your own due diligence. I am never going to encourage or tell you to invest in any individual stocks, right? And so on that note, I'm not going to go in deep on any individual stocks that I've happened to choose, but I might give you an idea of what they do if I think it's one that you might not have heard of, right? Secondly, generally, we're in pretty good times stock market wise right now, especially over in the US. It's pumping of late, and so I am up, but I don't want you to read too much into that and think that I actually, have any idea what I'm really doing, because a monkey could have been throwing darts at a dartboard and maybe you would have got the same result as me, right? You never know, because they are good times, and we're only a month in, so another month down the line, I might do no more updates, mate, because I might be way down, right? Final thing to say, you're gonna see a percentage. Don't take too much notice of the percentage, because I've drip fed money in, either when I've paid myself out of business, or when I've just felt like it, or when I've seen certain stocks that I want to buy, so I need more funds in my account to buy them with, right? So the money is drip fed in, and so the percentage isn't particularly accurate, because I could put money in right now and my percentage return would go down, but really half of that money's been in a second, right? And equally, I could sell all my bad positions and pull the money out, and my percentage gain would go up, right? And it would look like I'm doing sick, right? So just don't read too much into that, right? So there's two main reasons why I'm actually bothering to have a crack at some active investing, right? The first, entertainment, really, just kill a bit of time. We're in lockdown, it's boring, I'm sick of battering my girlfriend on FIFA. There ain't much else to do, so I thought I'd just have a flutter, really, for the sake of keeping myself entertained, right? Second reason is just out of interest, really. I want to see if I can beat the performance of my index funds, which obviously track different markets and stuff. So basically just want to see if I can beat the market. If I can, then eventually I might, try and make some money off it. And actually, although I'm not withdrawing any money at this point, eventually I might get to a point where I might want to, right? Because you do have a capital gain allowance, and in an ideal world, if you're going to take home as much money as possible, right, you want to maximize all your different allowances, right, don't you? So your personal income tax, capital gains, your dividend, before you hit those higher brackets. And so why not, right? Might as well have a go. So before I get into the actual individual stocks that I chose and show you all my positions and everything like that, I just want to quickly go over my general kind of strategy and a few goals that I had. So I've got some notes, so don't forget. I'll be quick and I'll jump into the juicy stuff that you really want to see, right? I'll put a timestamp as well, so you can actually skip this if you want. My initial goal was don't lose money, right? Now, that might actually sound stupid, because you might well lose money and not be doing anything wrong, particularly depending on the state of the market at the time and what's going on, right? But over the long term, if you're doing it just for entertainment purposes and your account balance is just getting lower and lower, then take up ping pong or collecting Pokemon cards or something different. I didn't invest any more money than I could afford to, so I'll probably put a bit more in this month than I will be doing in subsequent months. Obviously, generally, you want to divert as much money as you can to your ISA, max out your ISA contributions within the tax year of I think it's 20 grand, and then you can play around with the rest, right? I set up two pies, so there's a pie function. I'll show you that shortly. If you're familiar with Trading212, you will know what it is. I set up one that was just ETFs and one that was a few individual stocks. So really what I wanted to do was compare my individual picks to the performance of the ETFs, similar to how I'm comparing it on the whole to my index funds that are in my other account, right? Again, that's just a kind of measure to see how you're doing, if it's worth doing. A lot of times people would be better off just sticking the money in ETFs, right? I might be in the long run, who knows, right? So finally, I tried to be somewhat diverse, at least between different sectors, right? You will see that I'm not particularly diverse in a geographical sense. I'm very US focused, although obviously some of those companies are just listed on US stock exchanges, but actually do most of their business, you know, whether it's in China or Europe or whatever, right? All right, so we've arrived at the point you've all been waiting for. I'm just gonna hop straight in and go through it. So, account value 4566, and of that 186 are free funds and 4380 are actually, that's the portfolio value as of the time of recording, right? And as of the time of recording, we are 24.32% up. So if I just change this to the monthly view, you can see every time that little blue squiggly line goes vertically up, that's when I've deposited funds, right? So you can see it's a gradual kind of step in. It's a drip feeding rather than just chucking a load of money in at once. So if I drag this across, you can see kind of performance over time. So early on, I did all right actually after the first week or so. I was about 6-7% up at one point before we dropped back down. And then towards the end of December, I had just over 2,000 in, I think it was. So as of, so the last deposit was 31st December. So then I went into the kind of New Year break. It was quite a big break when none of the markets were really open. Had a account value of 2707 and a return of minus 0.84%, so it was down 0.84%. Since then, continued to drip feed some money in, saw some good buying opportunities that I thought were worth it, and we've done pretty well since then. We had a bit of a sketchy Friday a couple of last week or the week before, but we recovered well, and as I say, just over 24% up overall. So let's just dive into the pies. Two pies, as I said. We've got the 2021 growth, which is just a shit name that I came up with because I couldn't think of anything else to call it. That's 66% up there, the individual stocks that I chose, and then we've got an ETFs pie, so 3 ETFs in there, that's 10% up. So that's a bit misleading, only because my growth pie has done really well the last couple of days, whereas the ETFs has not done so well over the past few days to a week. I wouldn't be surprised if I saw that balance out a little bit and that gap close a little bit. So, you know, I don't think I can confidently beat ETFs by 55%. I don't even think that I can confidently beat them, to be honest. So anyway, let's jump in. So the ETFs pie, 3 positions: clean energy, medical cannabis, electric vehicles, 10.74% up, £116.24. Not been performing too great the last few days, but I'm pretty confident in these. I'm pretty sure that they'll follow up with some decent days in the next week or two. So let's jump back out, jump into the other one. So 4 main positions in here, but there was supposed to be another one in there. I'll show you that. On Trading212, you can only put positions into your pie if they allow fractional shares. So if you can't buy fractional shares, you can't put them in your pie, just because there's a feature where you can chuck money straight into your pie and it will divide it evenly or as per your proportions into each position, right? And so if that money isn't exactly divisible by the share price, it wouldn't work, right? So there is another position that I have which would have brought my percentage way down actually, which I'll get to shortly. So in here we've got Canadian Solar, bit of a renewables play, just because obviously there's going to be a general move towards that kind of direction away from fossil fuels. Now I've kind of hit that from a different angle, which I'll show you shortly as well. As I say, I'm not going to go into these too much. Albemarle, chemical manufacturers, bromine, lithium. Obviously lithium, where does lithium go? In batteries. Where do batteries go? In electric cars. Where do electric cars go? Everywhere in 2030, right? Lam Research, some kind of exposure to semiconductors. Not quite the same as the typical ones you see, like Taiwan Semiconductor, you'll see that around a lot. But I felt like I wanted to kind of get exposure to that sector, but just at what I felt was a fair price, right? And I think that was that for me. So EHang, so they do UAVs, so unmanned aerial vehicles. They've blasted it for me recently. I think there was an interview with the CFO on Bloomberg and the share price just skyrocketed. So a lot of my actual gains are solely down to EHang, right? It's a mad company. They do mad little drones that take people on like tours and stuff, but they're pretty small as of now. Well, they're not even profitable, right? A lot of these companies don't get profitable for like 5 or 10 years, but apparently they reckon they're going to be profitable in 1 to 2 years, which is obviously pretty good for the share price. Anyway, that pie's doing pretty well. show you some of my other positions. So I want to mention a few here. So we've got Baidu, it's like basically the Chinese version of Google. We've got Bilibili, which is basically the Chinese version of YouTube. We've got AFC Energy and also Walgreens Boots down the bottom, which I'll show you here. So these four, ignore them, only irrelevant for this because I actually opened these positions all within the past like week or 2 weeks, right? And so, you know, I have no idea where they're gonna go, hopefully up. But Walgreens is more of a kind of recovery play. Now, a few others. So NEO, obviously NEO is the hottest stock right now. It's probably the most popular stock in terms of the kind of online chat about it, you know what I mean? Everyone is jumping on NEO. I got in at, well, what I think was a decent price, who knows? I'm currently 20% up on it. Currently 9.6 shares at an average price of 46.55. So I did get in before that, but I have averaged up, yeah, every time I see like a bit of a dip, or at least what I think is gonna be a dip, I might get another 1 or 2 shares. All right, so let's talk about Centrus Energy. So Centrus Energy are my biggest loser so far. I think, are they my biggest loser? I think they're my biggest loser. Not percentage wise, AFC Energy are down 12.39, but Centrus Energy are down 10.91, the biggest like actual value, so £28 down on them basically. Centrus Energy, they are my attempt at some exposure to the uranium sector, right? So, I mean, I'm not gonna explain it all, but I think that it's worth having some kind of uranium plays just because we're not gonna get to renewables fast enough, essentially, and actually nuclear energy is like much safer, much more efficient than it used to be. It's kind of got quite a bad rep. I think it's going to come good, right? I'm holding anyway, right? So Centrus Energy produce something called high assay low enriched uranium, right? So LEU is their ticker symbol. I mean, I guess they got it because it's low enriched uranium, right? So I went on a bit of a ride with them, went down quite a lot, not a lot, but I mean, I've been down further than I am now. Came up, was back in the green, now back down again. Yeah, I'm just holding on this. I'm gonna see. Have added slightly to my position. I might add again, like if we drop any more, or yeah, we'll see. Now let's talk about EHang. So EHang, the biggest winner. Again, I went on a bit of a ride with these. I bought in here. So this dotted line that goes across, that's your average price, right? So before I added to my position, that would have been lower because I obviously added to it at a higher price than my original price, right? And so you would have seen it intersect like here. And so when I first bought in, I think it was the day, just by luck really, just by luck, on the day that I bought in, they went up about 20 something percent, right? Jumped up, and then they hung around there for a little bit, went back down, and then they were down a fair bit. I think I might have added to my position as they were going up, and then they were down a fair bit after that, and stayed down for, you know, a week or two. And then the past week or so, they literally just started absolutely flying. So again, bit of a ride with that one. Glad I held on to it because it did come good in the end, and I think it's gonna, well, I don't want to say what I think anything's gonna do, but I'm keeping hold anyway. All right, any more to mention? Tattooed Chef, I'll be honest, I didn't do my research into Tattooed Chef. What I did was I watched a video on YouTube of someone saying how sick it was, and he'd done a lot of research, and I thought that's good enough for me, and then I bought in, right? So that's not what you should do. You should do your own research, but I'm just being honest, right? Not all of these, some of them I've put some time into, like, but not all of them. I'm not gonna lie to you and pretend I know when I don't, because some of them, like Tattooed Chef, I just went off someone else's word basically. So yeah. Oh, there were a couple more that I wanted to mention actually. So I did have a position in Megit, which is quite a massive company actually, and I was holding them as a bit of a kind of recovery play. They do a lot of, well, they have quite a few different kind of revenue streams, to be honest. And I still think that they will recover to previous March 2020 kind of figures, but it just might be very slow. And although I was confident that the recovery would be there, I thought, you know what, like I'm being too safe here. I'd rather take the money out and put it somewhere else. So I think I was up on that position when I exited it, but it might have been like £2 or something. I just got a bit kind of impatient, but not just impatient. I kind of just reassessed my priorities and thought, well, I'd rather use that money somewhere else that I think I'm going to see a quicker return on, right? I also had a position in Scottish Mortgage Scottish Mortgage Investment Trust, right? But again, that was more of a safe bet that I got early on, because I was playing it fairly safe to begin with, because I'm not going to go through what an investment trust is, but it's kind of similar to an ETF in the sense that you're getting exposed to all of their assets, right? Again, that was one that I held, and I thought, I'm pretty confident that it's going to keep, this is a safe bet, right? But I just thought, I've already got index funds off somewhere else, I've got an ETF's pie, like I don't have to be too safe, do you know what I mean? I want to actually have a go. I made a couple of losses. One was Microvision. Basically, I didn't do enough research on it, right? And so I wasn't confident in it whatsoever. I bought into it too quick. It wasn't a big position, it was 100 quid or something. I bought in, it did a massive run up, kept buying in, it dropped down, and it was just hovering down quite a bit. I think I exited that, I was about 25 quid down on it or something. And it's recently come back up. I don't know if I would have been up yet on it, but if I would have held on to it, it would have been fine. However, I just didn't have the confidence in it because I hadn't done that prior research into it, you know, to give myself the kind of conviction, right? And so you do need conviction with, you know, the positions you're holding, so that you can hold through those, you know, so that you can hold and keep buying through those dips, right? I didn't have it with that, so, you know, transparency here. Anyway, that's it so far. Let me know if you found it interesting. As I said, I'm certainly not encouraging you to make any individual investment choices. Like, I don't care what you do. I don't want you to, you know, I want you to not lose money. That's my, you know, and so I don't want you to do anything daft, right? So do your own research, all that stuff. Now, if you found it like interesting, let us know by letting us know. Leave us a comment, I don't know. I don't mind doing these. I'm not going to do them every month, but I might do them, like I might do it after 6 months, something like that. Do an update then if people care. Yeah, anyway. Also, let me know how you're doing if you're on Trading212. Yeah, so see you later.